Welcome back to the Clean Techies podcast, where we interview climate tech founders and VCs to discuss all things building and investing to solve the biggest challenge of our generation, climate change. Today we have a pretty fun conversation with Eric Rubenstein, founding managing partner at New Climate Ventures, a pre-seed through Series A climate VC that's based out of Houston, investing across various verticals of the climate revolution. In this conversation, we discuss his journey from corporate investing in O&G into founding NCV and the impetus for his shift into climate. We also talk about the role of energy majors in the energy transition as well as the climate revolution. He gives a lot of really solid advice to other climate VCs as well as to founders on the fundraising process. Overall, Eric was a great guest, and I'm glad we get to share this conversation with you. Enjoy the episode. All right, welcome to the show, Eric. How's it going?
It's going well, thanks.
Glad to have you on. We had a bit of technical difficulties before the show, but we're here and we're recording on a Saturday. So I appreciate you jumping on a Saturday. How are things in Houston?
Things are quite warm, but
Yeah.
aside from how hot it is and the inability to enjoy being outside as much as you normally would, it's been really good. It's been a great summer.
Yeah, I was gonna complain about how hot it is in New York, and then I remembered I'm talking to somebody who's in Texas today, so I probably should keep my mouth shut. But anyways, well, I appreciate you coming on the show. Let's just start with a quick introduction to yourself and a little bit about your background.
Yeah, absolutely. My background is largely in commodities trading from a professional perspective. Was at Louis Dreyfus and then at Citigroup on the commodities trading desks at each place. And while I was at Citigroup, was not just working with the trade desk and informing our trading decisions, trading as well. I was working with customers, so talking to the petroleum producers, chemical companies, airlines, all the consumers and users and producers of petroleum and petroleum products, hedge funds, pension funds, was dealing with technology companies and such, and discussing the future of oil markets and different petrochemical markets, and found a path while at Citi to invest directly in companies as a strategic investor. So was investing to first kind of streamline our processes, enhance our trade analytics, and later to develop new markets. What all of that led to is the launch of New Climate Ventures in 2021. So New Climate Ventures, we're investing in decarbonization technologies with a focus on hard to decarbonize sectors. And it's a cross sectors and across technologies. So we're investing in climate tech, circular economy, food and ag tech, energy transition, and enabling technologies. So software companies that can help folks to reduce their emissions or avoid emissions. So we have invested in 24 companies as of right now, and are continuing to deploy and are investing in very wild and interesting technologies that a decade ago would not have been able to have a path toward being economic and viable. And today, with the technological enhancements we've had, with the adoption of renewable energy sources like wind and solar, which have greatly reduced the cost of power, you can really have these next generation technologies that are going to be viable in the coming, say, years and decades.
Yeah, 100%. And I guess I'm really curious, like, how did you go from what you were doing and how did you get interested in climate in the first place?
Yeah, no, great question. I found that in my personal portfolio, everything I was investing in was gravitating towards sustainability. And when I was starting to develop these new investments and new markets, recycled plastics was the first area that I was approaching. And I saw the technologies in advanced recycling could be emissions reducing relative to both mechanical and just virgin petrochemical production. And so that was the first light bulb. And then the second was in 2019, when the first handful of companies started really announcing their emissions reductions goals, so their sustainability goals around carbon emissions, and looking at what had happened in recycled plastics and how the Coca-Cola and Pepsis of the world had made announcements and then had kept increasing the amount of recycled plastics that they wanted in their bottle mixes over the course of a number of years, expected that there would be a much bigger universe of companies that were going to be making announcements and wanting to decrease their carbon emissions. So that number's gone from a handful in 2019 to over 4,000 today. So that trend has kind of accelerated and continued as anticipated. And so looking at that, and then looking at the new technologies, the carbon sequestration technologies and carbon capture technologies and carbon utilization technologies, and looking even at a wider lens and a broader scope, really started to solidify the idea, for me at least, that the future was here and we'd be able to actually bring these into market. The consumers had spoken, and we all as consumers have said that we want this. We're willing to buy these products, shoes that are lower carbon emission shoes. We're willing to adopt wind and solar. We're willing to buy Teslas, all of these things. The corporations have latched on and they've made the announcements I'm talking about, but they've gone way further than that, and they're adopting technologies. They're involved in the marketplace, and all of that's led to government interest as well, which is more obvious today with the IRA in the U.S. and other policies. But it was really that light bulb around, look, recycled plastics, alternative foods, agricultural technologies, carbon capture, storage, utilization technologies, all of these and beyond are at a point where we can really make this something that adopts into society and could even be a lower cost to society in the future once we scale the same way that wind and solar has been.
Hey there. Quick break to remind any founders or VCs listening, if you are looking for deal flow, seeking to raise funding, looking for partners to help service your needs, or perhaps you're looking for corporate investment partners, feel free to reach out to us through our Slack channel, which can be found in the description. Because we meet a lot of people in this space, we set aside time each week to make introductions to the various people that we encounter. This is something we do free of charge in order to help these incredible companies solving climate change to scale. Looking forward to hearing from you in the Slack channel. Mm-hmm. Yeah. Okay. Very interesting. Yeah, I love to understand people's journey because it's usually pretty different for everybody, right? There's some things that are similar, but a lot of times it's a very different type of path into it. I'm kind of curious, if you could talk a little bit about, and I don't know if this is referring to your own investments or not, but you said that you were CIO on your LinkedIn of a family office. Is that referring to your own investments, or was that with another group? And I'm just kind of curious how that informed your decision, informs your decisions now as a VC in the space.
Yeah, that's my family's
Okay.
money. Yeah, so it's myself, and my kind of broader family. So back when I started personally investing in companies and in venture funds, my dad started to see what I was doing as I was talking to him about it, and he really started to like the idea and the thesis I had around how to build a alternative like asset portfolio. And previous to that, I was investing in real estate, and we were co-investing in real estate. So that's really where that came from.
So I guess the question I was really curious about is if you were investing into funds at the time rather than into individual projects, like why then decide to start your own VC fund? Like, did you see a specific, value prop to do that separately, or like, why would you do it yourself instead of just continuing to invest in other funds doing that?
No, I was investing in both. It started like the first investments I made in the venture space were in venture funds, but it broadened out pretty quickly. So, I mean, even by the time New Climate Ventures was launched, and at least I personally had invested in over 30 companies. And then, my partners as well, like, we've all invested in numerous companies. So it's between all of us, it's hundreds of companies I think we had invested in.
Okay. Got it. Okay, that's helpful. I just want to make sure I clarified that. And then
Yeah.
one thing I'm kind of curious, a lot of people they see VCs as kind of these this ideal, this is where you want to get to. This is kind of these people are invincible. But could you talk about the biggest challenges on a daily basis of being a VC? Because a lot of people don't see, call it
Right.
the difficult side of it,
Yeah. And particularly when you're a first time fund, when it's really a startup itself. So, and just reflecting back though on the why get into VC. I mean, another thing I was saying is that there just wasn't attention, or at least there weren't as many funds in the early stages, and that's where kind of a gap was, I'd say, or just less a focus from the institutional level on climate tech. So where funds were being raised a few years ago, and even still, you have folks that are raising bigger funds that are deploying in a traditional strategy of investing in roughly 10 companies that are going very deep into all those companies in terms of putting a lot of money to use, which means if you're going to be writing a, say, $5 million, $10 million, $15, $20 million check into a company, you can't be doing that if the company is only raising $2 million at that time. So a lot of the money that's in the space from the institutional side is coming in later than these seed stages. Our focus tends to be pre-seed through Series A. So we're speaking to that, and we're building a bigger portfolio as well to reflect that. So if climate change needs all of the above approach, we want to be able to invest across these different verticals and really address that and have multiple investments in each of the kind of verticals such that we can address, the climate action that needs to happen. So just to mention that, but then in terms of what's the challenge of being a VC, it's really that day to day that you're not just making investments, and you don't naturally, like if you're at a corporation and you're making investments in companies, you have an infrastructure around you. There are lawyers that work at that company most likely that you can talk to, and before going to outside counsel, in the case that you have to go to outside counsel, there's going to be other things that make things a lot easier and smoother. Your entire back office is probably right there in house. So having to deal with that day to day and having to make sure both the fund is operating well and the investments that you're making are being diligenced and monitored well, and putting all of that effort in is really something that I don't think people recognize, and startups in particular, where I mean, at least we are bombarded by startups that are seeking to raise capital, and by people that are trying to raise capital on their behalf. And it's hard to respond to everybody because there's a lot of people approaching, and at the same time, we're looking within a thesis and we're trying to find specific things that we want to invest in, and we're teasing that out of the market as well. So yeah, I think it's all the above. It's keeping up with being respectful to the startups that are raising, knowing that they want money, but they don't necessarily know how challenging it is also on our end, and how we're founders ourselves in a way, and have our energy split between 8 different areas all the time. So I'd say those are the challenges. It's just that we are a startup as well.
Hey there. Are you building a climate tech business and looking for very specialized talent? Consider reaching out to our sponsors, NextWave Partners. NextWave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change yourself, feel free to reach out to NextWave at next-wavepartners.com, or reach out to one of their consultants directly via their LinkedIn page. Yeah, I think it's probably easy as somebody who doesn't work in VC to consider and think, oh well, they've got all the money, so therefore they must have executive assistants running around doing everything for them, and all they got to do is look at my pitch deck. So why don't they? But that's not really the reality, right?
Yeah.
I'd like to, so let's kind of shift specifically into the nuances of new climate ventures. So we already talked about how you started it. I want to ask and have you kind of reiterate or restate the remit you focus on and why you decided to focus on that remit.
The remit being decarbonization.
In terms of like what stage you invest in and the different types of companies and how you're broad across them.
Okay, so yeah, so I guess circling back to that, the idea is to tackle climate change head on, right? The idea within that is to decarbonize the planet, and that's the way that we are approaching that problem. And so, we have these verticals that we've thought up that address that, where the idea of there's a whole carbon tech ecosystem that needs to be developed and furthered. we can't just decarbonize the planet by changing the operations of businesses, because and multiple reasons, but say one reason is just technology isn't there yet. So say you're a steel company, you're still going to have to use a lot of heat in order to create steel. You're going to be using a lot of energy as a result of that. It's a challenge to decarbonize the steel industry today. In the future, maybe we can decarbonize it significantly. We're still not going to get to zero carbon emissions likely in the next 30 years, let's say, for the steel industry. So if we can't get to zero, then we need to also be removing emissions from the atmosphere in addition to that to decarbonize that space, right? And so to get to an actual zero carbon world in that way, where we're not emitting more than we are producing, or where we're not emitting more than the world would naturally be emitting if we weren't burning fossil fuels and using energy, we need to also be removing. So there's the carbon management ecosystem is one that we think about. And then as you kind of shift through, recycling of things is something that's important, whether it's recycling plastics and things that we put to our curbside, or if it's taking waste products, agricultural byproducts, let's say industrial byproducts, and recycling those so they don't go to waste. So that we don't have to produce new things, because the production of things is something that is generally and usually more emissive than the recycling of things. So it's kind of like reduce, reuse, situation where on the one end where you can reduce what you're doing, you can recycle what you're doing, what you've already produced, and then you can remove it as well. So that's the removal angle. And then when you start looking sector-wise, there are areas like the food and agricultural sector that produce a lot of emissions. So that's where food and ag comes in. Just the proteins we eat are 14% of global emissions that they produce. And that's just for the proteins. So the transportation used in agricultural, et cetera, is not included in that calculation. The airline industry is going to be hard to decarbonize. We already have an infrastructure in place to move jet fuel around to get it to airports. The planes obviously are using that jet fuel. So to be able to change to hydrogen or electricity in the future, you both need a technological advancement for the aircraft. But in addition to that, you need a whole new energy infrastructure in order to supply the energy for the plane to be able to operate, whether that's electricity or hydrogen in those instances. Which is going to be a challenge for society to kind of get to a place where you've totally transitioned away from jet fuel anytime soon. So as an example, like that's an industry that's going to have challenges. So looking at sustainable aviation fuels, looking at different technologies for aircraft. We haven't done a lot in that particular space, but that's a concept that the world has to tackle. The built environment is another, where you look at construction, similar to mentioning steel. It's embedded in that conversation. When you're building buildings, you have a lot of materials that take a lot of emissions to make, whether that's cement, whether that's steel, whether that's glass. So finding solutions to reduce the emissions associated with the production of those materials, looking at things that can make the building itself more efficient. So as a few kind of examples there, we've invested in a company that effectively embeds CO2 into cement. So it's converting basically CO2 into cement. That addresses that area. We invested in a polymer company that makes a polymer that reflects virtually 100% of the heat away from sunlight, which is going to be used in windows, is our expectation, and where they've started. So that's another one where it just makes the buildings more energy efficient. It's so hot out right now. Part of that in the home, and part of the cooling that has to happen is just because of the radiation coming through windows and that heating a room. So if we can prevent that radiation from coming in, then it's another way to decarbonize the construction industry without having to change your HVAC system and do other things. So just
Yeah.
some examples, but that's, we were also noticing that there's, like I said, there's less people coming in as early that have this institutional mindset, or I mean, this kind of corporate strategy mindset of this is how a company, this is how you attract those investors that can help us enhance in the future. This is how you can work within our ecosystem of people that we know and have worked with over many years in order to bring customers on board, in order to bring investors on board. So it's there is kind of a strategic element to the way that we approach our investments, as well as to how we can help and who we can help. It's often not just a question of can we put money to work, and will this benefit the planet, and can we make money doing it? It's also, can we help these companies and really help them get to where they need to be? When you're that early in the age of the company and the development of the company at pre-seed and seed, there's going to be money coming in after that's going to be bigger money that you want the right money there in order to help to develop the company further and to really help the company grow.
Hey there. Are you building a climate tech business and looking for very specialized talent? Consider reaching out to our sponsors, NextWave Partners. NextWave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change yourself, feel free to reach out to NextWave at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page. Okay. No, I appreciate that. I think that's really helpful. And just to reiterate, the purpose on the early stage was there wasn't a lot of companies, right? So that's why you wanted to focus on that. I think it's quite interesting that you, having been on the institutional side, are now investing on the early stage, because you understand kind of what it takes to get to that point, so you can help guide them. I think that's a certain value add that's important. I was just listening to a podcast this morning, and they were talking about a lot of people. There was the era of VCs that, oh, we just invest. We don't really help you out with anything. That way we're out of your way, right? Was their quote unquote value prop. But in reality, it's just an excuse, right? Because there is no value prop, right? There's nothing specific that you can bring to the table besides dollars as a VC. Um, I want to ask though, what was your experience raising the fund? So, this is the first time fund for you. I'm sure you have partners that you went into this with, but could you talk about the key things that you experienced, how easy or difficult it was, and what were the key, I guess, factors that really allowed you to successfully raise that fund?
Yeah, so I think the experience myself and my partners had is that there was a big change, I'd say, in the world when Eastern Europe, the war in Eastern Europe really started last year, and we've seen it both from a company's fundraising perspective and from fund of fund fundraising perspective, funds fundraising perspective, where people just broadly that were investing in companies, in funds, everyone slowed down, right? Everyone had time to think and make decisions as to where they wanted to place their money, because people were reevaluating the world and reevaluating the opportunities. We had a really big run up and big deployment period in 2021. And Silicon Valley is a symptom of this as well. Silicon Valley Bank and the failure there in the end, where a lot of money came into the space. And then things changed, and everyone started drawing down, deploying capital on the venture side and on the venture fund side, and on the company side where the companies were deploying that money. So you kind of came to this point where companies needed to increase runway and be careful with how they were managing their money, where funds were pulling back and making less investments, or slowing their process, evaluating their portfolio, and then making sure their portfolio was stable before or while bringing on new investments, which just meant less new investments. So the whole industry has kind of slowed down, and this is probably I just put it across the board into other areas as well, where interest rates going up has kind of changed some of the mindset. So I'd say in fundraising there was a change from pre-Eastern Europe going to war and where we are today. And And that's just an investor mindset. So things take longer than they had taken before. And getting people over the line had been more and is more challenging. I'd say the other thing is in the venture space, the pullback that's really happened has been in the later stages, where valuations have dramatically come down. I'd say in many of the later stages, Carter will put notes out on this and others. So it's well documented. So later stages have pulled back, and there are certain areas within venture that have also been insulated. Climate tech being one that has been more insulated, where valuations are generally creeping higher. Part of that might be because generally climate tech companies are earlier stage companies, broadly speaking, to begin with. I don't think you see a lot of pre-IPO climate tech companies out there today, where we will see a lot of that in the coming years. But you do have a lot of these seed companies coming up and Series A, Series B's happening, and valuations are largely higher in the climate tech space. So it's this interesting kind of juxtaposition. So yeah, we did see a slowdown in our ability to fundraise, and I think everyone has seen some of that. But at the same time, like, we anticipate that's going to get better as just the economy continues to truck forward, as people ingest what higher interest rates mean for society, and as we get past a period where people are worried about recession, like they are still.
Yeah, I think that's interesting. I mean, I guess it's encouraging a little bit to know that climate didn't slow down as much in terms of new funds being raised, right, compared to, traditional tech, despite all of the, the issues and investing in early stage funds being this is like the worst time for early stage funds when you look at the difference on the outcomes right now currently. But yeah, obviously this is just kind of an adjustment period coming off of the really big bull market. But the thing I'm kind of curious about is, do you think that this slowdown and this, like, people stepping back and thinking twice about what they're doing, is it in the long run? Yeah, maybe it's slowed the process now, but is it in the long run going to be good for the climate movement, because people are saying, hey, we need to help make sure we transition off of dependency on certain fuels or things of that nature? I'm just kind of curious if you think in the long run it's going to be positive or negative.
The slowdown now.
The retrospect, people stepping back and, like, looking at the war and saying, okay, what
Yeah.
should we be doing going forward? Because I think there was a lot of people rushing, and maybe they decide, okay, now that we see how
Yeah.
negatively this war can affect the world, and in particular Europe, like, should we be investing in more clean energy or whatnot, etc.
I think there has been a shift already in that mentality from the investors, where I mean, in a couple ways. One, at least funds say, like growth funds, they'll when you talk to some of them, that they want to be going earlier because they recognize if you want to be in climate, you have to be little bit earlier than you would have been otherwise. You have to be writing smaller checks. I don't see as much of that where they're actually acting and writing the smaller checks, but they say they want to be doing that. So I mean, that's somewhat encouraging for sure, that there's recognition that you need to be a little bit earlier in order to deploy into the space. So people want to deploy, is the point. And then second, like there's energy security. I mean, can certainly come from these advancements in technology. So I think that's something that people recognize, and that any sort of disruption in supply chain does bring that to the forefront. So there is definitely an element of, over the last few years, both with COVID and then with the turmoil in Eastern Europe, both of those kind of solidifying that energy security is important. And then there's more focus, I think, and the weather helps, I think, in this conversation, where the first thing that we might talk about, and I get it almost every day right now, where many people that day, the first thing they ask me is it as hot in Houston as people say? Or they say, are you guys, surviving down there? When this is, I mean, it's summer. It's always hot in Houston in the summer. That's not an abnormal thing. It should be the other way, where I'm asking people in other parts of the world that are normally a lot cooler, like if it's too hot. Like I was being told a story about Pennsylvania, and it used to get into the 60s or so at night up there, and now it's in like the 70s, 80s at night. So it's not as comfortable as it used to be during the summer, like this summer versus other summers. But the point there being that it touches people more. The extreme weather events are more frequent. And the more that it actually impacts people's lives, the more that they start saying, oh, maybe this climate change is real, and start seeing it as something that needs to be addressed, rather than something that's going to potentially solve itself over time because the world will cycle through this and we'll be okay. So yeah, I think from many different factors, it's people are getting more interested. I could give one more anecdote about just Houston, where when we were talking about starting a fund a few years ago, a lot of people in Houston were resistant to the idea of decarbonization technologies. Energy transition is something people have gotten comfortable with renewable energies. But when you start talking decarbonization, it starts to feel more viscerally impactful to someone in, say, the oil industry that made their money in the oil industry, and where you're talking about getting off of oil ultimately. But there's a change, I think, that's happened over the last couple of years where people are starting to recognize that we need to do something, and there are ways that we can change our businesses to adapt them to include these technologies, and then you can be part of the solution as well. So, and that's an argument that I think is easy to make, is if you're, say, an oil company, why not put up a unit that is taking CO2 and turning it into a sustainable aviation fuel? Why not have that if you can economically make that work? And then have that as part of your portfolio and start transitioning your portfolio the same way utilities have, by incorporating renewable power into their power mix. So I think it's something where you've seen the transition, or you're seeing it in many different ways, and this interest in both climate technologies, but in earlier stages as a result of that.
Mm-hmm. Well, I was going to ask this later, but because you brought it up, I want to ask it now, which is this idea of, in particular, people usually give a lot of flack to Houston because it's like the oil and gas, it's the energy capital of the world, right? And I've spoken with people in the past about this, and I said, listen, like, even though Houston was an oil and gas place, that was the innovation at the time, way back, right? But now they are still interested in being the future
Yeah.
of the energy space, right? So I am kind of curious to hear, maybe there's always a negative light cast on it, but hear the positive light, or your optimism on partnering with the oil and gas companies to actually do things in a good way to help transition this energy and climate transition. If you have any thoughts on that, I would be keen to hear that, and the general kind of vibes in Houston around this.
Yeah, I mean, we work often with oil majors or energy majors, and chemical companies. Excuse me, and there's a genuine interest in both being involved with these early stage technologies, but also somehow incorporating them into their businesses. So we are co-invested with some oil majors, energy majors, and such in some of our companies, for instance, because they recognize that change is necessary. And when you think about the financing needed in order to really scale these technologies, we're going to need a lot of money coming in. There's a kind of a gap in financing right at the critical stage of growth, where you're proving out the technology on a commercial scale. And then after that, we're still going to need plants just being put up of all these different technologies in different areas. So who's going to finance that growth ultimately? I think it's going to be the energy companies in a big way, in addition to, say, private equity and industries that are specific to these places, like airlines and whatnot. So you're going to need all of that, and the energy companies have to be a part of that. But yeah, some of the energy companies have their own corporate venture that they invest in companies, and we're doing that alongside them. I think the problem is that the major companies, or the bigger companies out there, they all have to deploy so much money into infrastructure every year that they putting $1 million or $5 million or even $20 million into a project in order to start scaling a new technology, when you have billions you need to put to work, is really challenging. it's just a different, it's a very small number where it takes many people as well in order to be involved in it. So you're distracting those people from doing the other things that they would have been doing otherwise. So you need like a little task force basically in order to be doing these things, rather than have it be permeating through your entire organization at this time. And that's kind of the challenge, I think, is you need the organizations, you need the opportunity to be big enough for them to be, actually changing and transitioning entirely away from what they're doing to new things. But I mean, at the same time, if the economic opportunity is there, they're going to do it, and they're interested in doing the right thing as well. So there's a lot of factors, but yes, every day we are involved with people in Houston because we are based in Houston, which means that there's a lot of energy people, and the interest is there. It's just challenging to figure out exactly how we get there, and there's more and more involvement every day. I mean, Houston is doing a great job of bringing more and more content and information and cooperation into the fold through some of the initiatives that are happening locally.
I also think it's important to note that there's a certain, if you're, let's just put it as what's a pretty common thing, right? You've got a PhD student or somebody really technical wanting to make a change in the climate, want to make a positive climate impact, and they're coming in with, in a lot of cases, like zero network, or maybe their network is largely sustainability or environmentally oriented, but those people don't sit in the same buildings as the oil and gas people. But the oil and gas people, or these just big energy companies in general, have a lot of distribution, right? They have a lot of like, if they do decide to adopt a new technology, you've immediately got a huge customer, right? And I think that in juxtaposing the two, you're going to have issues, right? You're going to butt heads and it's going to feel like a battle. But if you can work with them, you're going to be able to sell your products. You can have a certain investment and some insight as to how the conventional space works, because you can't completely try to upend the industry. You have to understand, like, if you're trying to change a conventional space, you need to understand how they do business and then work with them. But in addition, the people saying that we just have to turn off all oil and gas, like, if we do that, you immediately are going to run into issues where you have no ability to actually build new technologies, because you need energy to build things, right? You need energy to construct factories and build cities and stuff like that. So I think it's a difficult reality for a lot of people to face, who are especially very passionate specifically about the degradation of the environment. But to remember that there's reality, right? We have to work in conjunction with what's true. So I appreciate you bringing that up.
Yeah, and I think another term that's being adopted more and more is, instead of talking about an energy transition, talking about an energy addition, where really we're adding these new technologies, and we're going to need more energy and more energy and more energy over time. So the fact that we're just going to need more means that we are adding these technologies, and while on the edges it will take away from these core businesses of the energy companies, and it'll be gradual, because we do need to transition society, but we need to transition society by adding new energy, production capabilities from different sources, and also just adding to the mix of what all of us are involved in. And there's going to be more energy over time, so it will be gradual, like you're saying. There's no way to flip a switch and turn off all the oil and gas production and have society function. So we need to transition through an addition.
Yeah, and in addition to that, there's obviously, you have to consider all the countries that are developing, right? If they can build renewables, easily, if there's ways to do that, that's good. But we still cannot prevent these countries from developing. That's very, very inequitable to them to prevent them just because of the climate issue. We've got to find ways to do it in a clean way where they can still achieve the outcome of growth. Going back to the investment side, I really can't understand, what are the characteristics or the traits that you tend to look for in founders, the technology, whatever it is, in the startups that you choose to invest in, anywhere from pre-seed to Series A?
With founders, I'd say a lot of the focus is on the team and on the founders when you're in these early stages. You have to, if the founder can't make a technology successful, the technology on its own won't become successful. You can have great technology that just never really makes it to market because there wasn't a commercial path to bring it there. So you need a commercial mindset as a founder, not just a technical mindset, or at least that the company needs that skill set in the mix of its management team, and it has to be something that's embedded and strong. So serial founders are oftentimes easier to want to back because they have experience. They whether they were successful in the past, typically, when definitely if they are successful, then that makes it a lot easier to make a decision. But just having the understanding of what it takes and the challenges with being a founder and scaling a business is important. The founders need to understand their technology. They need to be able to communicate well. There's a lot of just factors that aren't quantifiable in that regard, that are more qualitative, that need to be considered. But it's a belief that these founders, so someone who inspires belief is important, because it's a belief that they can actually do what they say they want to do, and that they have to be understand also and have a plan of how they're going to get to where they need to be and be pragmatic. They need to be open to, not too rigid in the way that they're thinking. They need to be flexible and need to be coachable. If they are too, fixed in the way they think something needs to happen, it means the opportunity to shift slightly in one direction or another, or change entirely the way they were approaching something is going to be hard for them to do. But in those early stages, you run into problems with the technology, you run into issues in the external environment where fundraising becomes challenging. You need to stretch your money. You run into all these different issues that need to be troubleshooted and addressed. So being able to listen to the people around you, or just find the information you need from people or from places to adapt to situations is super important. And so being coachable is something that we also rely heavily on in our evaluation of founders.
When you are looking at a technology, are there certain positive or kind of maybe disqualifying characteristics that you look at from when you say, okay, fundamentally, if this technology is doing this, we need to see this potential market, or this factor, like you mentioned, the steel decarbonization, it's about the energy side. Like, are there any frameworks that you have for, aside from the founders, looking at the potential market for the technology?
Yeah, I mean, typically it starts with the size of the market and evaluating if the size of the market's big enough. And as you start moving down, and use steel as an example, like you just did, yeah, there's a large steel market. It needs disruption. You look at the landscape of other companies in that space that are trying to do the thing that competes to change that industry. And it may not be just technologies that are directly competing. Say, if you were trying to create a decarbonized steel, you look at all the other companies that are trying to decarbonize or create a decarbonized steel, but then it's also things that might compete as other building materials. Are there other things that people are going to be using instead of steel, and what's happening in that kind of clean tech area of the world and of investment and potential? And you start looking at that. So it has this fan, I guess, of focus where you start narrow and then you build out from there to understand like how that fits into an investment thesis for that particular use case in that particular area. And so, we definitely do that. And we want the companies to understand too, if they don't know who their competitors are, and if they're not thinking about what competition might look like, or if they're not looking at how much money it'll take to hit specific milestones that they need to hit in order to get to where they need to be in order to raise more capital. I mean, that's oftentimes a place where we get uncomfortable with a company that we're diligencing, is if they need more money than they think they need and they're unwilling to raise it. And if their milestones don't line up with their next fundraising round that they want to approach, then what are they going to build a story around to raise that capital? What's going to increase the value of the company in that period of time in order for them to be able to raise that next round or attract investors in. So those are things we definitely evaluate and want to make sure that the team has not just thoughts on, but that they're planning around those milestones, that they know what those milestones are, that they understand what it takes to get there in terms of dollars. And so all of those things that we think about in terms of not just the market, not just the competitive landscape. There's a universe of things that we need those founders to understand and be thinking about. And there are a lot of times things that, they're all the things that go into our investment decisions. We're asking them these questions, and we're challenging their assumptions to the extent that they need to be at least the questions brought up as to why they're doing things one way and not another way, and oftentimes founders have great answers, and they have thought through all these things, and they have an idea about how they're going to go to market, how they're going to bring on customers, or they've already brought on customers, or it's a very there's a lot that goes into it, and the founders need to have a lot of things in mind as they are going through both fundraising on their end, because they're probably answering these questions for others as well, but also on running their business.
Mm-hmm. Okay, very good. I appreciate that. I want to go to the section about advice to founders and VCs. So I think let me see. The first question I kind of want to ask is, so as a VC, what is your, I guess, method for discovering new things or making sure that you're, as you said, like keeping an open mind to different methods, and rather than just saying, how do we decarbonize what's here? What if there's a completely new alternative? Like, what is your reading schedule? Just how do you make sure that you're taking in new information and trying to be on top of things?
Oh, wow. Yeah, because there's industry specific things. So say climate tech. So I'm on a lot of mailing lists for climate kind of thoughts and reflections and research and information. So through that, you can find certain trends, and then you look into different companies within those trends. Like, that's one way of doing it. Paying attention to just the broader world and what's happening, and seeing kind of globally and topically where the world is and what's interesting. Sales trends are interesting, just looking at consumer behavior, because ultimately consumers are going to speak as these products come to market, and understanding like where consumer interest is. And that's sometimes a little easier because we are consumers as well, and when we have things that we'll buy or not buy, and we can actually, you and I even just see this where what kind of clothing are people buying, what brands are they attracted to, because some of the brands are doing great work in adopting new materials in the case of clothing, or recycled materials, alternative materials into their products. The shipping, people are using different shipping materials. There's enhancements in optimizing just delivery. So all of these things are things that you can see in even the news. There's accelerators, incubators, different groups that are helping startups to get to where they need to be. The universities, you can look at universities and grants that are being given out of governments or different philanthropic organizations as well. And as you see where that money is going, that it can be highlight both where they want to put their money, which means that there's non-dilutive financing for these companies, but also what's interesting in the world, talking to other funds, talking to corporations, and understanding where their interests are and where they want to place their money, and where the exciting things are in the world that they are trying to invest in. So if corporations, or adopt for that matter, when it comes to corporations. So if corporations are saying, hey, I guess a real-time one would be petrochemical companies. Petrochemical companies are more interested right now in recycled plastics than they are in biodegradable, compostable plastics. So that, I'm widening that out as if all of them are like that. But it is something that when you talk to 1, 2, 3, 4 different companies, and they all are saying the same thing, it starts to become a trend that you notice. And so then you look for companies that are in the recycled plastics arena more so than the compostable arena, for instance. So that, I mean, another way is a lot of companies do come to us directly these days. So then we've invested, I think, only one company that's come to us directly so far, but that there will be more. And so yeah, those are different ways that we source our deal flow.
Mm-hmm. Okay. And then from, when you talk about the certain, mentioned this a little bit earlier, the values that you can provide to your portfolio companies, kind of the value prop, what would you say are the core things that you believe a VC should absolutely have to provide to portfolio companies to really add value based on your experience?
Oh, I mean, have to is the money, right? Like that's the have to. The you should, I think, is the other area. Excuse me. And I think that what you should do if you're a venture fund is you should be helping your companies. Like just placing money, in my opinion, isn't enough. It's necessary, obviously, but the way we behave is we introduce other potential investors, potential customers. We advise on strategy. Sometimes we're doing these things from a formal capacity as a board member or board observer or an advisor. Oftentimes it's an informal capacity where through our diligence process, oftentimes we get to know the founders well enough that they want to bounce ideas around with us, and they want some guidance periodically and have catch-ups about what's going on in the business. And I think that's a healthy way to behave for investors to understand what's happening in a business so that you can help in the future when they do have financing needs or when they do have strategic kind of directions they need to go in. Not everyone's equipped to do that, but I think largely funds can equip themselves to do that if they don't have kind of certain areas of knowledge of how to help a company. They can always hire in or introduce them to somebody. That's the easiest thing to do, is just making those introductions is very important, and let the founders find the people through your network that can help them. So opening up one's network, I think, is probably the most important thing a fund can do, other than just fund companies.
Mm-hmm. Okay. And what about from a founder's perspective, your advice to founders either on what to keep in mind as they're starting their journey, let's say very early, like raising pre-seed or seed, as they're starting their journey, what are the things they should keep in mind kind of in the long term, because it's easy to get caught up in the small stuff? Like what would that advice be to founders? Maybe common mistakes you see that you think, hey, founders need to avoid this in order to make it all the way through to Series A and proving out the technology.
I mean, that's challenging. It kind of depends what area they're in. I'd say, because I would say making sure you have commercial traction is important, but making sure you have commercial traction is more important for, say, a consumer product than it is for a technology that is novel, that is going to be game changing in an area. They're making sure you have like a pilot plant or a commercial pilot that's operational is super important. Being asset light, I think, is very important too, particularly in the climate tech space. A lot of founders, when we first meet them, want to build big plants and spend a lot of money to build those plants. Better to build the smallest plant you possibly can that proves your tech out at a scale that will allow for that big plant to be entirely de-risked, let's say, and for you to be able to allow someone to spend the money to build that plant. As a startup, you don't need to be building that big plant. You need to find someone else to finance those big plants. You need to be asset light and proving things out as far as you can on the technological front without building and spending a lot of money on a big plant. You may need to do that for, say, your first commercial plant, but making sure that you're not doing that after then is important. So thinking and being very aware of attracting customers in or creating revenue, being asset light, and improving the tech out to a point where it can scale, be licensed, or where others can be spending that money. and identifying who's like what types of people, what types of groups what types of companies will be spending that money, and talking to them about it and gearing up for them to be that customer in the future. I think those are important things that founders should be considering, particularly in climate tech.
Mm-hmm. And what about advice to founders during the fundraising process? Any like common things that you say, hey, there's usually a knowledge gap in this area. They don't provide this information, especially at the early stages. And there's a lot of companies right now at that stage, right? We don't have necessarily the most mature market where there's tons of growth funding happening. So what
Yeah.
is the advice to founders on the whole fundraising process as a whole?
Yeah. Having a nice tight pitch is important. Knowing your business, being able to explain your business, and being able to do it in a way that excites people. There, people get really good at pitching, or people who are really good at pitching, they get you excited, and they can do that very easily. And it's because they have an exciting product. They know what they need, or at least they know how to say what they need, what kind of funding they need, how far that gets them, what milestones they're going to be hitting, like being able to just say things very easily, and having like even a one-line explanation of what the company does that is very simple to understand. That's important. And it may be a little bit different than just what the core product is and does. It may be, this is what we're doing to help society, and then going from there. And it's not just we are decarbonizing society. We are changing the way that people think about building buildings, by bringing the best X thing to market, in the easiest way possible, and being able to explain that, that ability to communicate is helpful. And as a founder, if that's not your natural state, if you aren't good at that, you're probably not going to have time to train for that. You may not have the capital to invest in, whether time or money, and being coached on it. But finding people that will help you with that pitch, that you can test it out with, in the early days of the pitch, to hone it, whether that's other founders, whether that's investors, kind of making sure that there's something there is important. See too many founders that don't know how to pitch, and you have to tease the information out of them. And it doesn't mean that they're not going to be successful, and it doesn't mean we're not going to fund them, but it just makes it a little more challenging to get from A to B, and make a decision. So the cleaner that pitch is, the easier it is for someone to make a decision. Having a data room, or just having information on hand that you think investors are going to want, already prepared before going to folks to raise money, it would be useful as well. We are always going to be asking for supplementing materials. We're going to be wanting to see financial models in order to understand how the company is actually going to achieve what it says it's going to achieve in the period of time it says it's going to achieve it. And these are near-term things, right? This is 18, 24 months that we're looking at. We expect things are going to change, but making sure you have all those materials on hand, I would say, is important. So from a fundraising perspective, get your pitch down, get your materials in order, and test it out a little bit before going to market, and then just sell it.
Yeah, I think it's difficult I've had a number of people on who are very technical in nature, and they hate the fundraising process because it's just not them, right? They don't enjoy it, but a lot of them either find a co-founder to help them with that,
Right.
or they get coaching and they try to like adjust their mindset. One last question I have would be for you is, are there any particular climate VCs that you look up to, and that you kind of really respect and you think they're doing things really well? Just kind of curious to hear who your role model is.
Yeah, there's a lot of great VCs out there. I mean, I guess it's pretty easy to point to the ones that people talk about, like Breakthrough and Lower Carbon Capital, but and we've co-invested with some great investors as well. Muse, MUS, is a great co-investor of ours. Energy Foundry is one that we've co-invested with. So just picking a couple. I mean, the corporations as well. Toyota Ventures is very knowledgeable and thoughtful. Fine Structure is a venture fund associated with Fidelity. They're doing great things. There's a lot of great corporations out there that are doing great things or have funds associated with them that we cooperate with and work with and co-invest with, and really like what they're doing as well.
Yeah, I love to hear when there's collaboration across the different stages, because I think it's obviously there's nuances. Everything is, maybe generally understood what milestones have to get to in order to get the next fundraising, but it's important to understand the nuances and the slight changes and what other people are seeing at different levels, because there's information, there's a lot of information now, so it's about finding like different types of information and the right kind of information to inform your decisions. But no, this has been really great. I really appreciate you coming on. I quite enjoyed the some of the broader discussions that we had today. Where should people reach out to you, and what's your call to action to the audience?
Feel free to find me on LinkedIn. Our website also, www.newclimateventures.com. Can always go there and submit a form, or just see what we're doing, see the portfolio, and get involved with portfolio companies. Just from a listener perspective, just being aware of the problems that are out there, in kind of the broader climate change situation that we're in, is important. But actually solving that in your day-to-day life, our purchasing decisions matter. Where we are spending our money matters, and corporations respond to that, and the startups are being built to support the interests of the consumers, whether that's us as consumers or the consumers as the corporations, and the government. So I think we just need to speak with our dollars, invest in the space as well, invest in startups, invest in funds. Happy to have conversations about that with folks if people want to fund some of the companies and whatnot, and like their technologies, or just want prototypes or access, like beta testers. I would say companies probably need too. They can find it on their own, but having people that are excited about the space, involved in the space, and transitioning their careers even to be in the space, we've seen plenty of that. Feel free to reach out if those are things of interest and can help out on those fronts. Talk to people often about how they want to transition away from whatever industry they're in, finance or energy, and how do you break into these different areas, whether it's venture or just how do you find a startup they want to work for, and what should they be considering. I was having one of those conversations yesterday with somebody who is diligencing companies and in an effort to find a job at them, but also has a lot of insights on the companies as well that he's diligencing. So it was a really interesting conversation I had yesterday. But yeah, feel free to reach out.
Yeah, absolutely. That last point is interesting. I've met a lot of people who are looking to go into the company. So I usually tell them to do a bit of consulting work so they can get an insight before they join. But no, I really appreciate you coming on, Eric. This has been really, really incredible. I'm looking forward to seeing what you guys continue to do.
Appreciate it. Yeah, look forward to being in touch.